Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on Wednesday afternoon, February 19th, 2014. Let me read this to you, then we're going to get right into the chart, and I'm going to try to be a little bit more brief today. The website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. We're starting out taking a look at a little bit broader view than we usually do on our daily look at things. But I just want us to see a couple things that I think might help us put some stuff into perspective. These kind of golden colored lines are what I want to point out here, because these have been on the chart for a while, and really since last summer. You can see here's our support line, and then here's our resistance line. And since last summer, these lines have worked very well. Now, we've gone up and down, and we've had a number of, it has not been bottom line, top line, bottom line, top line, bottom. It hasn't been a perfect zigzag. As a matter of fact, we start here, we go up, we come down and don't quite hit the line, come up and don't quite hit it, then we hit it, then we come up and hit it again, then we come down. So it hasn't been a perfect A, B, C, D, E pattern or anything that's been extremely impressive in that regard. But as far as support and resistance, these lines have worked. So let's just keep that in mind as we go forward, because they're going to come into play again. Now, in addition to that, if we back out on a 4-hour chart, I want to show you that the last time, not back here, not what we did back in the early part of February, but rather if we go back to the last time we tagged that line back in October of 2013, we went up for about almost 2.5 weeks. Then we broke our little trend line here. There's our support line. Okay? Then we came back up again, and we worked sideways for approximately 3.5 weeks before we broke out of that range and then started to move higher. And all of this was taking place in the context of once we hit this spot in October, this set up some resistance. We formed this little small inverted head and shoulders pattern right here. Left shoulder, head, right shoulder. And once that broke out, that signaled that the markets were ready to get on up and get a little higher. Interesting to note, we also formed a head and shoulders top right here. But that pattern failed. It did not take out the support line from the neckline of this small pattern here. Instead, it came down, broke its own neckline, but then quickly came back to re-challenge the levels set by both the head and the right shoulder, for what it's worth. Now, let's fast forward a bit. Let's look at a 30-minute chart, because today we saw a back test of this channel right here that broke a little bit yesterday. We back tested that today, and then the reaction we got off of that back test tells me, okay, this is now broken. All right, yesterday it wasn't really broken. Today, we are technically significantly underneath that line by if you measure the close to that line, this line would have been at 1860 at the end of the day, and here we are at 1828. So we're 32 points. We're about 1.6, 1.7% underneath this line. So now the question becomes, what's the market going to do here? Well, we've got some support underneath us. We've got this, which is an extended trend line back from 2 and actually call it almost 3 tops back in December. I've kept that on the chart because all of these things line up so nicely right here. That could have some influence. Additionally, if we going back to the 30-minute chart, we've got our own little strange inverted head and shoulder pattern that does not have much of a right shoulder. That could give us some support. And then we've got this teal colored line that actually goes way back. We have to look at this on a daily chart. That goes all the way back to November of 2012. And you remember that line has served pretty well, even though we did get underneath it back in late January and February of this year. But let me show you one more thing. And really, we're sort of in a spot in the chart to where I can't make any real bold predictions at this point. Interesting to note, our high today, which backtested this line, also took the S&P up to 1847, which was exactly where we were back in the third week, I believe it was, third or the beginning of the fourth week of January, before we had that gap down. So again, this looks like another bout of gap resistance. But what I want you to see is that time before, back here in October, when we came off that low and we came up for 2.5 weeks, we did see some selling that broke that line, but then we started to rebound. So here we come off the low, we go up for what? About 2.5 weeks. Okay, almost the same kind of a picture here. So all of this to say, I wouldn't get concerned until we start plowing through some of these support lines. And I know there are good ways underneath us, but I just want to give this market the benefit of the doubt. And there's a potentially extremely bullish possibility in this chart. And we talked about it over the last video, but I'll point it out again. If this line right here were to end up getting taken out, now with this weakness, if we were to come down and trade down for a spell, then come back and take this line out, we would be looking at a really large inverted head and shoulders that has a target that it would be in excess of about 120 to 130 points on the S&P. Again, that is speculative, but I said, I told you over, it was either yesterday or the day before, or maybe it was over the weekend, but I made mention of the fact that when we were down here, where this was a potential neckline at about 1798, I felt that I needed to mention a little bit more about the fact that that we've seen these patterns that don't have much of a right shoulder, inverted patterns, and I'm just putting out the heads up here, not calling it because it hasn't broken out, but the heads up that there is a possibility that we could be looking at a large continuation head and shoulders pattern, but that would only be confirmed with a move over our neckline right here that is at right around, for all practical purposes, about 1850. Now, what's interesting to note is that our smaller sort of malformed inverted head and shoulders down here has a target still of 1858. So, guys, I think that's going to be it for today. Too bad we broke this, but I don't think that means it's the end of the world. I think we look and we maybe just kind of watch things on a 5 or 10 minute chart and see if this little leg down might give us a clue that it's going to firm up and reverse back up, because there is a potential strong bullish outcome out of this chart. Now, I'll go more into that tomorrow. But just so you realize, there's also a bearish possibility here, and that is we make a double top, but that would not be confirmed until we would take out, let's back out just a bit to make sure I say this, that this would be a top here and potentially a top here. That would not be confirmed until 1740 would be taken out, because that would be our little midpoint between our two tops. So it's not all rosy, it's not all beautiful, and it's not all peachy keen, but possibly an inverted head and shoulders continuation pattern right here as the bullish picture, which, by the way, would have a target up around 1960 if it breaks out, 1965, something like that. Or the thing to watch for if you're looking for a sign of bearishness, I would say getting underneath, setting a new low underneath 1740, where we just rebounded from. I think that would be a fairly bearish signal for us. So, guys, there's your video for February 19th, 2014. I want to thank you for taking time out of your day to watch this, and thank you for your support.